Hi there, thanks ever so much for tuning in to this video. I'm James Strode, publisher of the Global Legal Insights to Fund Finance for 2022. I'm here with two heavyweights of the industry that most likely do not need an introduction, but I feel compelled to give a short one nonetheless. Firstly, we have Mike Mascia, partner and chair of the finance group at Cadwalader, and he's also the contributing editor of the GLI Fund Finance 2022 edition. Secondly, it's a pleasure to say hello and introduce you to Jeff Johnston, head of the asset management team at Wells Fargo and chairman of the Fund Finance Association. I would like to start really with you, Mike, I suppose. And before we look ahead, not only to the pink book and to the industry, I would like to cast your mind back to 2021, if I may. We've obviously had a COVID shock, and 2021 saw, I suppose, the return of stability in the market, a return of lenders in the market, and of course, continued growth of products. Simply put, for you, was it a good year to be a lawyer?
Well, thanks so much for having us, James. It's good to see you. And thanks for everything GLG has done to support and produce the Pink Book. Hard to believe it's in its 6th year. It's kind of cool. Was it a good year to be a lawyer? Yes and no. It was a good year on the economics. We were incredibly lucky to have very busy clients that kept us really busy throughout the year. But it was a hard year on the people side. People had to work really, really hard. The LIBOR transition created a lot of work. And a lot of that work didn't feel value add for our clients. And so there were certainly struggles. Nobody wants to do work where the principals don't feel a lot of value. So that was hard. And, our business and many of our clients' business were, victims of the Great Resignation, just like, almost all parts of the capital markets. So those things were challenging. I think we ended up 10 lawyers, but it took hiring 22 to get there. So there were certainly recruiting, onboarding, and retention challenges through the year. But hard to complain on the economics. We were certainly fortunate in that area.
That's great. And Jeff, to you, just as we enter 2022, and thinking about what's just happened, where do you see growth and expansion in the market this year?
Yeah. Thanks, James. And echo Mike's comments. Appreciate the work you guys do and for having us here. And honestly, I would probably give a lot of the same answer that Mike did on the 2021 perspective. And I think we're hoping and hopeful going into 2022 that some of the things around the personnel front settle down, that clearly the COVID impacted macroeconomic, the health crises that we've been in, the inability to connect with our friends and families and colleagues the same way that we've been accustomed to begins to reside and creates a little bit more of a positive atmosphere. And, I would say to Mike that we love and appreciate all of our lawyers and everything they ever do for us. But hopefully there's a little bit less focus on things like LIBOR transition and, a little bit more focus on deals. But we're super bullish on 2022. We think fundraising activity in the space is going to be really strong. It was extremely strong last year. We think that, there's certainly some headwinds and some reasons to be concerned from a macroeconomic basis. But, my suspicion is there's going to be a lot of deal activity, and there's going to be a lot for participants in this market to stay busy and to be focused on this year. So we're pretty optimistic about the prospects on the business side.
That's super. And Mike, you've just heard Jeff's bullish for 2022. From your position then as a private practice lawyer, is there anything in particular that you're looking out for this year? Anything that's exciting you in this era of, what they call Fund Finance 2.0?
Yeah, we share Jeff's constructive outlook for the year. I mean, there are macroeconomic challenges, and Jeff, I want to ask you your thoughts on a couple of those in a minute. But the overall sentiment we think is very positive. The vast majority of our clients seem to have a view like Jeff, that the pipelines look good, that the forecasted opportunity set looks really, really positive. Nothing has really slowed them down. There are individual clients that have individual issues. They may have grown significantly last year and have gotten up against their lending cap. And we do expect the regulatory environment to get harder as opposed to easier in 2022. But we're bullish, and we're forecasting double-digit growth again for next year. We also think the NAV side of the market is poised to kind of increase, both at the banks and in the alternative financing market. We think that the growth rate in that area might even outpace the subscription growth rate.
Yeah. I mean, I would second that. I think it's been the long running joke in the industry whenever, someone talks about NAV financing or hybrids or, esoterics, that, it's more of a like seeing ghosts, or, the Loch Ness monster, that it's more hype and more conjecture than reality. And I think that has meaningfully changed. I think the mini recession, COVID impact, thoughts around shoring up liquidity was advantageous to that product and to some of the users around it. I think banks, who are notoriously slow about coming around to new ideas and getting the internal approvals and setup, have been focused on it for a long enough time frame and have made good headway and are starting to do more transactions. So I think the one-off kind of bilateral anecdotal financings that we've seen in that space probably move into more broadly syndicated, cross-market adaptation that hasn't really been part of the toolkit historically. So I would certainly agree with Mike that there's more progress, more innovation than there ever has been around the space, but that's also pinned up against the demand for the regular way product and core financings that a lot of people spend time around is still there. So I think a lot of participants from the lending side are going to have to evaluate and think about where do they want to spend time, and where is their comfort around risk and opportunity. So it's good to see new things happening in the industry, and I think we finally crossed that point to where it's not just conjecture, that it's it's people's realities.
Yeah. Hey, Jeff, one of the things that I'm trying to be humble about is that I've never really led through inflation like what we're seeing now. The last time there was inflation like this, Paul Volcker was the chair of the Fed, and you and I were kids. What do you think? I mean, how do you think inflation at this level and the likely corresponding rate increases are going to impact the market?
Yeah, well, first I want to clarify that we have a different level of gray hair on the beard. So, let's use kids loosely on that timing. Joking aside, it's absolutely right. I mean, there's, you look at a 40-year trend on the 10-year Treasury, and it's one direction. It's from the top left to the bottom right. And, I think I've been vocal around one of the core reasons that we've seen such growth in this industry and around alternatives in general has been a byproduct of low interest rates, or zero and near zero interest rates across the globe. So how economies react, how governments react, how central banks react to inflation pressures that we have now is going to be new for pretty much all of us. And I'm not really sure that, the folks that were around in the, 70s and early 80s, that the playbook that we're in today is necessarily going to be the same as what it is then. So, clearly that's the big focus, both from a, financial participant standpoint, but, back down to real life, how countries deal with the the lower income, the most vulnerable within our societies, who are most pressured by daily price increases or weekly, and monthly price increases on basic goods, I think is going to have a lot of ramifications that fold into government policy and, probably longer term implications in how financial markets work. So I think there's both the, how does it impact our modeling and how, buy sell decisions end up happening within companies, but it's likely going to be a new thing for the vast majority of society. So I still fall in the camp that long term there's deflationary pressures and technological advancement that we have, but it's going to be really interesting next couple of years. And I think so much of the COVID impact is likely to continue to put higher inflationary pressures than what a lot of people are forecasting. So I don't know if that directly answers your question. I still think that the fund finance market is going to be pretty appealing, and we're going to be at interest rates on a nominal basis that make the products that we spend most of our time in and around pretty appealing and in demand. I think for the investing side of the community, they're going to have, a little bit more of a challenge. And for the owner operators of businesses, they're going to have the most, challenging impact in how they push through this.
Well, that's great. Thanks for that, James. I could talk with Jeff about the market all day, but I know you want to talk about the Pink Book a little bit. So ask us about that.
Yeah, thank you, Mike. And what's really interesting from both of you there is the bullish nature of 2022 that we come into, but also the foresight to potentially navigate continuously choppy waters as well. So that was a great chat. But I do want to just touch upon the Pink Book ever so briefly. And actually, Mike, I'll pass the ball straight back to you. You're the contributing editor of this resource, of the publication. So I'll let you, if you don't mind, tell the folks at home watching this what's potentially new this year and what to look out for in particular.
Yeah, I mean, the Pink Book has always been one of the most fun things I do every year. I always enjoy it, and I'm always grateful for the work that all the contributors provide. I think they've stepped up again this year. I mean, it's not just take the old one and update it, it's new. And so the substance areas are new, the jurisdictional updates are all new, and a lot of the topics that people focus on are completely different. And so, in addition to the greater depth, which I think, GLG has done a good job encouraging over the years, we've got new substance in the book this year. So, I think that links up with a lot of the evolution in the market, and the Pink Book has done a good job of keeping up with how the market's been developing. So I feel great about it. I feel like, the contributors have created another good resource again this year.
They certainly have. I mean, we've got, and as you say, it's all about the growth of the market and the maturing across the globe, new jurisdictions, Norway, Portugal in there, to provide market introductions and overviews there, and as you've touched upon, brand new topics as well. So that's, as I say, couldn't have done it without the contributing authors and firms. So thanks to you all there. But Jeff, just as a industry specialist, if I may call you that, and somebody who's working in the bank, I'd be keen just to hear from you anecdotally about why you think the Pink Book is a needed resource in the industry, who you think should be picking it up, and make sure it's on their desk.
No, I mean, thanks, James. I think our industry for a long period of time lacked resources and lacked, sort of publicly available resources. If I think about my team's, specific growth, we had 3 people on our team back in 2010. We're over 100 now. There's been a massive amount of new bankers to this industry that had to grow and learn, and had to understand and quickly become specialists. And you can only do so much in on the job training and providing resource materials And, I think to the level of quality and detail that GLG has done and how they continue to do has been a fantastic resource. As there's just been massive growth from the number of participants trying to understand and learn and figure out how to make their way in the industry. And when we do interviews, 5-6 years ago, it was a little bit of, you get the response of, I can't find anything. There's nothing out there. I can go all across Google and can't find anything. And I think you guys have done a fantastic job in creating, the kind of optimal landing spot for people that are both new entrants or seasoned specialists that continue to, want to learn and want to, have access to valuable information and to, what's going on out in the marketplace.
Thank you, Jeff. I appreciate that. And again, I say thank you to our contributors for that. We have the onerous task of chasing chapters, putting them together, but it's really the hard work of everybody who's contributed. So, look, just before we go and wrap up, I think it'd be remiss of me not to have a quick chat and update as far as the Fund Finance Association. So, Jeff, if you don't mind, just explain what the game plan is for 2022.
Yeah, the game plan for 2022 is to have in-person events again, and we we're getting really close to the 11th annual global in Miami, which is at this point a full go. We've got record registration, a record number of sponsors for the event. Which is not what we had anticipated, but an amazing response. And, I think a lot of excitement for the community to get back together in person with friends and colleagues and, all the market participants, where we've really just lacked so much of that in the last couple of years. And for so many of us, the February 2020 event was people's last time on an airplane or last time at a in-person event before the lockdowns, began. So it was kind of an interesting point in time that we were able to, to come back together. And at least for a lot of the people that, that I've spoken with, this will be their first industry event, that they're going back to. So it's nice that, the FFA has been able to create an event that has that much importance and support throughout the industry. So I think we've been, I can speak for the board, and Mike can chime in as well. I think extremely pleased with the receptivity and encouragement that the sponsor community, has had around that. So we've got a good agenda set up, and I think as soon as we get this one wrapped in the books, we'll be turning our attention to the London conference that again should be in person and happening over the summertime, and hopefully we can do something in Asia, later this year.
Yeah, I agree with you, Jeff. I mean, I'm excited for the Miami conference. A lot of times I think people say excited and it's an overused term, but I really am. I was nervous for the FFA for a while. We're an events organized business, and there were no events, and we kind of got into survive and advance mode, and we did. And it worked. And, the sponsors really were supportive, and everybody's really bounced back nicely for Miami. So, really looking forward to the event and looking forward to kind of, getting back to our old format of getting over to London and getting to Asia. And, I'm really optimistic the FFA is going to have a fun year.
That's super, Mike, and thanks as well, Jeff. And look, we'll have the pink book there. You might have to be quick, otherwise they go. So we look forward to seeing you both there, and of course everybody at home who can make the travel over to Miami. We look forward to seeing you there. Listen, thanks again to you, Jeff, for popping along today. Thanks, Mike, for all your hard work this year and in the past 6 editions as well on the pink book. We'll keep pushing it. We'll keep growing it. We welcome any new ideas, but we, as I say, look forward to seeing you in Miami. And thanks again.